Many Brexiteers were hoping for a Singapore on the Thames. Amsterdam has indeed now replaced London as the largest European equity trading centre, and the Bank of England is warning of a further weakening. Not Frankfurt or Paris, but Amsterdam could establish itself as the most important European financial marketplace in equities. In any case, the Dutch metropolis developed into the largest European stock market in January, replacing London. On the Amsterdam stock exchanges, 9.2 billion euros were traded daily in January, significantly more than in London with 8.6 billion euros, as figures from the financial market company Cboe Europe show. For comparison, according to Cboe, an average of 17.5 billion euros per day was traded in London in 2020, while Frankfurt was second with 5.9 billion and Amsterdam was only sixth with 2.6 billion per day. Services, a total of around 80% of UK gross value added, were not included in the negotiations on the Brexit trade pact between the EU and Great Britain. With the end of the Brexit transition phase at the turn of the year, British financial service providers lost their automatic access to the EU internal market. Amsterdam benefits from Brexit, which forces investors in the European Union to look for trading partners within the community. After the UK voted to leave the EU in 2016, equity platforms Cboe and the London-based trading platform Turquoise began preparations to relocate. London trading decreased by more than 6 billion euros a day on January 4th, the first day of trading after the end of the transition period. Business on the national stock exchanges is also increasingly declining. With a decline in trading volume, the dispute over the future structure of financial market relations between the UK and the EU is coming to a head. The head of the Bank of England, Andrew Bailey, spoke in clear terms about the ongoing negotiations on the mutual recognition of financial market rules. "I'm afraid a world in which the EU dictates and determines the rules and standards we will have in the UK will not work," said Bailey at the annual Mansion House speech. "It is unlikely that London will give in to corresponding demands from Brussels," said the central bank chief. Should the EU try to lock the UK financial industry out of its market, it would be a mistake on his point of view. So far, the ongoing dispute over financial services has not led to the feared large exodus of banks from the City of London, but many institutes and other companies have established branches in cities such as Paris, Dublin, Amsterdam and Frankfurt and relocated their businesses there. Around 7,000 jobs migrated. At the same time, however, the hope of many Brexit supporters may remain unfulfilled for the time being to develop London into a Singapore on the Thames. With strong deregulation of financial market rules and low taxes. Central banker Bailey also opposed this. "Let me be clear, none of this means that Britain should or will create a low-regulated, high-risk financial centre and system in which anything is possible." There's still some hope for London, however. Trading in Swiss stocks resumed this month in Great Britain. It averages 250 million euros per day and is expected to build up to over 1 billion euros per day. The level before trading in them was provisionally suspended in London in June 2019. And Brussels and London want to reach an agreement on the mutual recognition of standards by March. But make no mistake there, the EU won't give in very much in the regulations. And if you want to stay informed, please subscribe to my channel and to my other channels. I'll see you in my next video. Auf Wiedersehen.